Good morning and happy Monday, traders. Gates W. Adams here on today's episode. I wanted to take a moment. As you guys know, of course, this program is sponsored by Apex Trader Funding. And the reason being, of course, is because we've got some just great and exciting news. And I wanted to share a little bit of the recent highlights. And the interesting thing about these facts that I'm going to share with you is these are consistent, these are ongoing, and these are continuing to grow day by day. But as we look at the most important facet that any trader wants to know about trader funding is what do payouts look like? In fact, when we look at the payouts, Apex does pay traders up to twice a month. It's a 15-day cycle. And just in this last cycle, to be the top paid trader with Apex was Lawrence from the UK with $89,088 paid out. That is just one cycle out of two in the month. We had actually... looks like 12 traders that were over $40,000 for this cycle. It took $40,000 to make it into the top 10, which I think is pretty exciting. And even in just the last 90 days, Apex has paid out in excess of $13 million to traders like you. The opportunity is phenomenal, and I just wanted to take a quick moment to make sure that you're taking full advantage of that. I say that with some exciting news. If you watch the show, you know we do this every show. At the end of the show, we're going to be giving away 3 evaluations at no cost to you for Apex Trader Funding for that first month. So I'll post that link here in just a few minutes as we get into the show. Now, today, I get the privilege of talking with Gary out of Phoenix, who is another one of the Apex paid funded traders that has agreed to come on and share some of his tips and tricks with us on today's Trader Bacon Show.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
All right, Gary, are you with us? There he is. Good morning, Gary. How's it going?
Going very well. Nice sunny day in Phoenix.
Yeah, I think that sun is slightly minimized in terms of what it's bringing. Are you guys in 110 plus still?
We're having a little bit of a break this week. We've got 2 or 3 days where it's going to be only about 105 and then back up to the 118s. So it's a little bit of a tough drag right now. Phoenix is a great place to live about 10 and a half months out of the year, but there are 6 weeks that are just brutal.
It's definitely brutal. So let's talk about what is working for you. You know, we got a lot of people who watch the show who are just devouring the ideas of what is working for different traders, because everybody's going to have a different routine. Everybody's going to have a different process, and not every routine, not every trading strategy is going to resonate with everybody. So we like to highlight different traders with different circumstances and just see what hits for everybody. So I love the idea of spending some time with you and talking about as you start your day, Gary, what does your typical morning routine look like? What basically puts you in the right frame to trade in the mornings?
Well, basically what I do is the night before, I'll take a look at the price action and the trends that have developed throughout that day. And then I try to look at setting up some different levels. I know that support and resistance are some of the main things that I look at, and I try to follow the trend a little bit. And having set that up, then I'll watch, throughout the day. I'll ask the overnight session. I'll take a look at that when I first get up in the morning, probably about an hour and a half before the market opens, and see where the levels are and what's kind of transpired over the night. Sometimes, it takes out some levels. Sometimes it goes completely opposite the way I think it's going to go. But I've got some levels set in there, and I take a look at that to see what I've done the previous night to see how that corresponds with where the market has reacted for the day.
Awesome. And we'll actually have an opportunity to take a look at some of that here in just a few minutes. Now, one of the interesting dynamics that I always find about trading in time zones, I mean, we live in, we've got 4 different time zones here in the U.S., and the market opens at 9:30 Eastern time. Now, you live in an interesting market where you guys don't do daylight savings anymore, so your time shifts from, half the year your market opens at 6:30, and half the year it opens at 7:30, right?
That's correct. Yeah, right now our market opens at 6:30 in the morning, so it's a little bit of an early day. You get up. Sometimes I'm up usually by 5:30 the latest to take a look at things, and usually it's observation from then. Remember when I first started to trade, the market was open, so I felt that I had to trade. And one of the things that I've learned over the time that I've been trading is that the key to, at least the key to my trading, is patience. You have to wait for your setup. You have to wait for the opportunity to present itself. You cannot create an opportunity. You have to wait for those opportunities to present themselves. And having the discipline to be patient was very tough. Breaking old habits is pretty tough. Once you get into a routine, it's tough to get out of that routine. But once you realize that that routine isn't working for you, you know that you need to make some changes or you're going to continue to fail. So that was a little bit of a challenge for me and a little bit of a hurdle because I was doing the same thing and geez, I was getting some results, but I wasn't getting the results that I wanted to. So changing some of the things that I did and the way that I did them, of course, made me a little bit better trader.
So what did that actually end up looking like for you? I mean, how long have you actually been just trading on a consistent basis?
Pretty much about 18 months, a little bit longer, a little bit shorter. I'm a business owner. I'm retired now, but I'm a previous business owner, 45 years in a certain industry. And one thing that I've read a good book. It was called I can't remember the name of it. Trading for a Living.
Okay.
Trading for a Living by a guy by the name of Alexander Elder. And the best part of that book was the psychology of trading, at least for me. I learned a little bit that a business risk is a lot different than gambling. So if you stop and think about that comment for a minute, if you're going in there with a prepaid risk assertion, you know what you want to achieve. Say you get in the market and you want to make a 3-to-1 trade. When you get your 3-to-1 trade, you get out. A lot of times you're going to say, well, I know this is going to come back. I know this is going to come back. You keep on holding, and you just lose more and more money.
I can assure you we have all been there.
Yeah, that's not a business decision. That's gambling. You're gonna play that next card because you think you're going to win. So psychology is a big part of my trading.
Now, you mentioned the book, and obviously you've been trading for about 18 months, and obviously you're at a point now where you're seeing those fruits. How long did it take after you read this concept? Because that's the thing. We don't go from concept to execution and perfection in day one, right? So once you just really kind of dug deep into this idea of this discipline, of this sticking to whatever rules you set, how long did it take you to really get consistent at following those rules?
It took me about a good six weeks, plus or minus. Yeah. It wasn't something that happened overnight because you still revert back. Like you said, you have a habit. I mean, if you get up in the morning and you stick your left leg in your pant leg first before you do your right one, it's pretty tough to get up in the morning and stick your right leg in first instead of the left.
A lot of it comes down to that consistency of routine.
Yeah, maybe it's a silly example, but it's what happens in life. And people are very habitual, and we take these trends and we transform them into our everyday lives. And so it's only natural we're going to transform them into how we work.
Certainly.
So breaking those habits was a little bit of a challenge for me. But once I did that, my biggest challenge in breaking a habit was taking a loss. learning to take a loss. In business, it was something that I had a hard time with as well here as trading. But once you learn, look, take that loss, you're okay. Another opportunity will present itself.
Certainly. And one of the ways that I've always tried to look at that, I used to own a mattress shop for years and years and years. And there was, certain things that I couldn't skimp on. I had to pay my rent. I had to pay my employees when I had them. And I had to have inventory, right? So this is all money going out. But without that money going out, there's no money coming in. And for me, there was a moment where I had to make that shift of a loss or a failed evaluation or a failed account that cost me money. Wasn't to me a loss. It had to become a business expense. It had to be a part of the process so that mentally I could accept it without all of the baggage that comes along with the psychology of trading losses.
Absolutely. So. Absolutely.
Excellent. Well, let's take a look. Let's see if we can have a quick look at some charts here. And would you mind sharing with us some of the things that you look at, the night before and pre-market that help you decide what it is that you're going to trade? Because if I'm not mistaken, you actually trade a few different instruments, don't you?
Yes, I trade multiple instruments. I focus on the ES, and that's what I've got up on the screen right now. But what I try to do is I'll trade a little bit in silver. I'll trade the NQ every once in a while, and I'll look for other opportunities that present themselves in the market, because sometimes, and today's a pretty good example of it, the ES is stuck in a little bit of an up and a down, a little bit of a chop zone. So when I went and set my targets up today, the green represents my support, red represents my resistance, and the thicker the line is, the greater the resistance. So sure. if you look around here, there's a lot of resistance in the 46.21.22 area. And the market today, when it opened up a little bit with a little bit of a push up to this little resistance here at 15. You can see it drop down again. So it's kind of stuck in this range. Of course, this isn't live right now, but it's stuck in this range right here, at least at that point in time. So I'll probably wait and see if the market tests this support level before jumping in. This is a 5-minute chart. This one here is a 15-minute chart, and this one here is a 60-minute chart. And you can see there's pretty strong resistance up around this zone between 46.10, 46.15, 46.20 in there. So I'm looking at this and looking at what happened overnight. You can see it started the market. We went up, we went down, we went up. Now we're coming down. Now we're looking like we're going to go back up. So I'm not trying to predict the market. I'm just looking at where the market might go and what opportunities are going to present themselves for me today in the ES. This line right here, for me, is a line that I watch a lot, because that's a heavy resistance line, buy-sell line, some people call it. So I'll look at something here. If it drops below this again, I will go ahead and this was a good opportunity this morning. Take that opportunity there, it presented itself. And if it comes back down here again, I'll look at probably taking that opportunity once again.
Perfect. Now, what constitutes an executable entry for you? Are you looking for it to come all the way back down to that heavy that heavy support bar, or is it a pattern that you're looking for? What is it that actually triggers you to move forward?
What I'm looking for is I'll look for this to come down to the support bar. If it gets a little close, I'll probably take the entry. If it gets into the 46, this is 4,600 right here. So probably if it gets into 46.01 or so, I might enter there a little early and then have a stop just a few points below down here, probably at 45.98. And if it hits that, they'll stop out. And then if it bounces back up, I have another opportunity that I could get back in. Try not to chase. Chasing usually, if you watch the bars, we're going up, we're going up, we're going up, and then boom, comes back down. So I try to look at these levels. These are zones that I have here. And this zone is a zone that I think it's probably support resistance within the zone. This is a support resistance within the zone. And this is an area that I'm kind of looking, this blue line, for where the low was for the overnight market. So if it gets down to here and breaks down below this, I think it'll pop back up. That's my theory, at least. I'll wait to see if it proves to be true. So these are some of the things that I look at. This is another level here that if it really breaks below this, I think it's going to drop more into the bear market type status. And right now, I think we're in a little bit of a bull market. So got it. I try to do this with all of my many charts that I look at, and I try to do this for each one of the commodities that I trade. Perfect.
Now, do you have a pretty standardized trade management model? Like, in other words, do you shoot for a certain gain versus your, like what is your risk reward ratio? Is that standardized? Is that preset in an ATM? Do you do this manually based on your current read? How does that trade management work for you?
What I do is I don't have a risk. I have a risk level, but I don't have a reward level, so to speak. It's finite. What I do is I try to go from level to level. Okay. And I'll listen. the sniper is a very good situation because it's telling me, especially if the TX, double TX, that's giving me an indication the market is confirming what I'm thinking. It's going a certain direction. So for instance, what I try to do, let's just say that I was a smart guy this morning and I entered somewhere in here. What I would do is I would try to go to my next level. So the 4603 brings me up to the 4608 level. That's a 5-point gain for me. Trading 1 or 2 contracts, you know, I make $300 to $500, $600, and then I would be out. Now, some instances, if I got in a little bit lower, where there's only a couple of points for me to gain, I might wait till it gets to the next level. But I always go from one level to the next level, and then I'll get out. I don't try and run it up. I don't try to hang on to it. I don't try to make a home run. I make my level, I'm out, and I'm done.
Do you manage your stops as you go, or do you just leave the stop and go for that target?
No, I manage to stop. What I'll do, I'll leave the stop as is. Usually my stops are about 2.5 to 4 points below my entry. Okay. Because I don't want to risk any more than a certain percentage of my portfolio. And with the sniper program, you know, once you get into their allowance that they have for you to make, you want to keep it so you're not losing any money.
Absolutely. Yeah. And in fact, I had the opportunity a couple of weeks ago to share my take on sniper, because that's actually what I trade as well. And, you know, I mean, I don't use the support and resistance the way that you do. I think that would be a great opportunity for me to add some confirmation, add some just more information for me to have more confidence in the trades that I take. But I absolutely, you know, as you sit here and talk about the sniper 2 weeks ago, the show really kind of went into some of the details of how that works, which was really fun for me to be on the other side of the mic, as it were. So, but I'm already seeing here how this added detail, this added confirmation, because I don't use, you know, 5, 15, 60-minute charts like this. You know, I actually just use the sniper charts and the stuff that's going on in the background that kind of sort of paints those automatic levels for me. But I love the idea of having just a better read before I go into the market and start making any of those decisions.
Yeah, one thing that you're not seeing is I have a couple of screens up. So this is only one of the screens that I have. The other screen that I have up has a sniper chart on it.
Which I presume, knowing that you trade sniper.
Yeah, and that basically confers what I'm doing. It'll tell me, like this morning, there was a couple of TXs, double TXs. There was an elevator this morning, and you catch the ride, and it's saying, hey, it's in my spot, elevator. I'm taking that trade, and it goes. So it's a real good. I kind of use the program, and I follow what Sniper does, and when it complements where I'm at, I know I've got a good trade.
Right. Well, and I think that's the thing. I mean, different people are going to look at different things. And I think one thing that a lot of traders miss is having a bigger picture. And I know a lot of people look at the sniper charts like, my gosh, they're so busy. And I actually equated this a couple of weeks ago to driving a standard. You know, for someone who's only driven an automatic, it seems overwhelming until you've done it a couple of times, you know, and it just becomes natural. But this added detail, this added information just takes that a little bit further. So for somebody who has trade hesitation, who maybe sometimes is just misses the trades because they just didn't take that, I want to say leap of faith. I don't think that's the right verbiage for a trading system, but they ignore their rules because they have that little bit of doubt. I think this is a great way of eliminating a lot of that doubt.
Yeah, and if you look at the 60-minute chart here, you can see where some of the stuff hit a little bit. And since I've been on here, the trend is a long-term trend is up. So you're looking at long-term trend versus mid-term trend, and then I use the 5-minute chart for my entries.
Sure. Okay, that makes a lot of sense. And I mean, again, obviously it's working for you, and I think that's the whole point of having guys like you on the show, having folks like you on the show. Is that anybody can talk about what they think is going to work. But at the end of the day, it's about what's actually working, what's actually putting money in the bank. So I love the extra information and the extra detail that really helps bring it all to life.
I'll just show one more thing here. I don't have it marked on the chart, but right here is a real nice zone, if you will, that confers with a lot of things. So if you look at this zone right here, this is the 45, 95 to 98 zone. And you look over here and you've got the zone right in here where it's going to hit. So
right.
95 is where I've got it setting, 95 on the 60-minute chart. It just gives me a little bit more indications that I can look at things and wait for it to get there and then listen to Sniper tell me to get in.
Perfect. I love it. I love it. I'm going to have to talk to you after the show and get some extra confirmation. So let's shift gears here a little bit, because again, I think that, you know, it's great having some of the specifics, some of the strategy details and everything like that. But I think what's more important is really what trading brings to your life. You mentioned that you own a business, you're retired. I know a lot of people retire with the intention of just hitting the golf course, but some people like to continue doing something. What has trading brought to your world through this, basically through this transition for you?
Well, I'll tell you what, I'm 74 years old, and I worked until I was about 72, and I'm a kind of a guy that likes to work. I like to keep my brain going. I don't want to sit around and on my thumbs and do nothing. So I do play golf.
Nothing wrong with it. That was not my point.
You know, and trading's a lot like golfing too, because, you know, if you blow a hole, you know, what are you going to do? You've got more coming ahead of you. So, but I like to keep my mind sharp. And trading, you're going to keep your mind sharp trading. You keep yourself focused. It's a great way for retirement, and you can supplement your income as well. And, you know, Apex has been a great tool. I don't have to use my money. I can use theirs. And it's nice to get a interest-free loan from someone to go ahead and do something that you like to do. So I like this. As I said, I'm retired, but I look at this. It's not a job. It's kind of a really rewarding interest that I have, and it's a good monetarily rewarding job, you want to call it, or hobby, or however you want to focus on it. Most people out there, I think, don't look at it as a hobby.
No, but it's kind of hard to look at it a job either, because, I mean, are you really spending anywhere near that traditional 40 hours a week dealing with trading?
No, I mean, there are some mornings that I've got up in the morning and I've made, you know, $1,000 in less than 3 minutes.
Right.
I mean, where can you go to do that? Those are rare days, but they do happen. And if you focus, you can do that.
Well, and that's the thing. I mean, I know everybody likes their particular markets that they're comfortable with, but I will tell you, I love trading NQ specifically for that reason. If I'm not out in a trade in less than 60 seconds, I start to get anxious. And NQ pretty much, either way, it doesn't matter. Usually it's a win, but even if it's a loss, I'm usually out less than 60 seconds. And that
NQ is a tough one, but and that's a good market to do too, because the tech stocks drive that market, and when they're doing well, you know, it's a good opportunity to trade there. And that's when I usually move over to the NQ. Like today and this week, there's a lot of stuff coming out with the tech stocks, Apple and AWS and all that. So I think if they do well, the market will do well on the NQ side. But you know, you got to watch that one, man, because it can drop just as fast as it goes out.
Exactly. That's why I do utilize automated trade management. My stops go in automatically. Now, I'm not going to say I've never had a stop get passed up. It happens, but it doesn't happen often, thankfully. And you know, we all just got to watch out for whatever the dynamics of what we trade. But that's fantastic. And you know, obviously, you mentioned the idea of basically utilizing other funds to trade, and you know, when you started off, obviously, you and I spoke before, and you didn't initially start trading with Apex. You started trading your own funds, right?
Yes, I started trading my own funds, and when I started trading, I lost my own funds. So it wasn't a good area, but I stuck with it. I knew that if I did some reading, did a little more research, studied a little bit, it wasn't as easy as I thought it would be. It's a very challenging trade, if you will. But once you tend to master it, it's something that if you have the discipline and the patience and you have the support from people, like Apex and the Sniper tools, you can be successful. And I don't know what the success rate is. I've heard people tell me that 90%, 95% of people who trade fail. I don't know that. I look at Apex and see there's a lot of people out there making money. So
right. Well, and that's the thing, we'll never know the actual percentages. I know a lot of people like to quote certain percentages to make a point, and I think for the value of the point, they're accurate enough. However, at the end of the day, we don't know how many people are out there trading and blowing accounts or anything like that. But I think, and I know for me and for a lot of other traders that I've talked to, and I want your take on this, psychologically speaking, and in the way that you actually execute and live as a trader, have you noticed a significant difference between when you're trading your own funds versus trading in a paid account?
This may sound a little different, but I think I'm more cautious trading OPM, other people's money,
right,
than I am trading my own, because it's mine to win or to lose. But when I'm trading someone else's money, I try to be a little bit more cautious with it, because it's mine. They're letting me use it. I have the privilege of using it. So I do tend to be a little bit more cautious with OPM.
And ultimately it's about whatever gets you the best results. If you're more cautious, now, again, I think as long as we can stay away from that trade hesitation, but if you make better decisions because you're being more cautious, at the end of the day, what happens?
Sure. Yeah, you make more money. Yeah. Let's just let it ride. It's it's just another 3 points, another whatever it is, $50, $150, $200. So that's okay. I can cover that. Well, now it's like I don't want to lose that money because I want to keep it in the positive side.
Exactly. That relationship builds, and ultimately the opportunities tend to build with that. So. I love the attitude. I love the mindset. I love what you're doing. And again, this speaks very directly to me because I know you and I essentially trade the same system, and I'm seeing some really awesome stuff on here that I'm probably going to want to dig a little deeper into. So as we kind of start to wrap things up, folks, I want to encourage you, take a moment to fill out that form where it says the Benzinga forms. For some reason, the chat's not working for me. I can't post in there, but that link that says forms.gle, make sure you click on there and register for the 3 evaluations that we are giving away. We have a little bit of a change in the guard today. So those emails for the winners will go out by the end of the day. So just bear with us. We don't have the actual winners. We normally announce them on the show, but I assure you we will get 3 winners, and they will be emailed before end of day today with the link and everything that you need in order to get those registered and set up. As always, I appreciate you guys. Thanks for hanging out with us. Gary, what a pleasure to chat with you today. Always great to just see what's working and really what makes the difference. And I think you've done an amazing job of sharing that with the rest of us today. So my deepest appreciation on that. We've got another great show coming up next week, Monday. What'll that be? August 7th at 11 a.m. Eastern time. Don't miss it. I'm going to try to get some cool details out within the next couple of days, so keep an eye out for those as well. And for the rest of y'all, enjoy. Have a wonderful rest of your week. Keep it green, and I'll see you guys next week.
Thank you, Gates. Appreciate the opportunity.
Absolutely a pleasure, Gary.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.